go. Hi, everybody. Welcome back to another edition of VC TV. I'm your host, Kyle Ellicott. Today, October 28th, we've got a fun episode for you as we're going to be talking about preparing your business for exit. Now, on both sides of the table, as investors and entrepreneurs, this is always a top of mind and something we need to know more about. As investors, you're constantly making investments into companies at all different stages. However, at some point, there will be the opportunity for exit, whether that's mergers and acquisitions, whether that's a public offering of some shape and form or something else. What do you do? How do you help? How can you be of assistance? On the other side, as entrepreneurs, how do you ready yourself from the beginning to build a sustainable business that could get acquired? And what do you do at the time the acquisition comes to? Well, guess what? That's what we're going to be talking about here on VC TV. We're joined by some outstanding members of the VC TV family who are going to share their thoughts, insights, and experiences as we might hear of a new situation that just happened recently, perfectly aligned with this topic today, to make sure that you are all educated on all sides of the table. But before we get started with their introductions, big thank you to the Latoka team, to Hasmik and Maria for making today's episode possible as well. I'm your host, Kyle Ellicott. Let's kick it off with introductions. Nicole, kick us off first. Intro for those who may not know you.
All right. Hello. Good morning from the Silicon Valley. I am Nicole DeMeo, and I wear a couple different hats, figuratively and literally. I am here on the show today to talk about my hat that I wear for my firm, Outfront Solutions. It is a marketing strategy, branding, and business development firm, and we help companies that are looking to exit or grow, build valuation. So this is right in my wheelhouse, and I love speaking on this topic. The other hat that I wear is in venture capital. I am a fund advisor and an LP to a fund called How Women Invest, and we are actively investing in female-founded and female-led companies. I'm also a venture partner in two other firms, Seed Milestone Fund and Andra Capital, and I'm looking forward to our discussion today.
Awesome. Wonderful. Thank you very much, Nicole. Vandana, to you, short introduction for everybody who may not know you.
First of all, thank you for having me here and the entire team of Latoka and VCTV. I was in Singapore and Jakarta for 15 years in investment banking, where I had my own family office fund. This is my 7th year back in India. I did investments, then I went back to advisory. Currently, I'm connected with 300 investors globally. We pick up global deals. We are sector agnostic. Typically, we do a $1 million to $50 million. I've given 160 talks all over the world. I've been given 2 awards. One is I'm the top 10 women leaders in wealth management 2021. My brand Convanto comes under the top 10 women entrepreneur brands. We are one of the finest boutique investment banks led by a female founder in India. Apart from this, I'm also an advisor with Loyal VC, the Canadian based VC fund with 165 investments in 35 countries.
Wonderful. And last but not least, Keith, a little intro and background, please.
Hey everybody, Keith Gillard, I'm CEO of UpperStage Capital. After spending 20 years in venture capital, I have launched a new private equity buyout shop. So perfect for talking about today's topic. I've also recently had a number of exits out of my portfolio just in the last couple of months. It's been very active. So I'm happy to talk about this from the sell side, but also it was announced this week that UpperStage acquired company called Talius. So this is my first buyout deal, and going through things from the other side of the fence has given me some very interesting insights and learning, and I'm happy to help pass along whatever wisdom I can to the audience today.
Absolutely wonderful, Keith. Let's jump right in with this big news. I mean, you went through the acquisition process recently. So sitting on the investor side, you probably saw a few things that you want others to be aware of, or lessons learned? And then also from the acquisition side, being involved with the company, you may have had help to ready that business or others as well. Kind of give us an overview of what just happened and kind of the lessons learned during that process of acquisition.
Sure. Yeah, I'm happy to. Well, we were looking for a particular profile of company. We've identified a very interesting funding gap in between venture capital and mainstream PE in the companies of, say, $2 to $8 million of EBITDA, where there are very few institutional investors. It's mostly the realm of high net worth individuals looking for dividend cash cows. We're looking to apply a different approach there. So we're specifically looking for these type of companies. One thing a lot of these companies have in common is succession problems. There is no one to take over from the baby boomer founders or managers as they're looking to transition into their next phase of life. And so there are a lot of these people are looking to sell their businesses. So they're very welcoming when we approach them and say, this is our interest, this is what we're looking for. With the case of Talius, we found something that seemed a perfect fit right away. And we began a diligence process from the initial conversations maybe 5 months ago through to closing the transaction 2 weeks ago, or 10 days ago, we just closed the transaction. There's a fair amount of work that has to be done. There's a lot of diligence, and there can be frustration on both sides as the sellers think that they are providing everything that anybody could ever want, and the buyers are like are asking for things that we think is a natural thing to provide. But in our case, right, both sides, yes, we have people on our side who have been through this, but we've never bought a company like this before. And on the seller side, they had never sold a company before. And indeed, that's going to be the case for most people until you get into the serial entrepreneurs who repeatedly build and sell businesses. For most people, they are going to go through this process as a virgin, and they're going to be dependent on really good advice. One really great resource I can recommend to anybody as you prepare your business for exit is a book by Ezra Roizen called Magic Box Paradigm, a framework for startup acquisitions. This is a wonderful book. It's a very short read, very large text. You could read this on a flight if you dare to go on airplanes anymore. But this describes a business development approach to engage with multiple potential strategic acquirers and to get in bed with them and develop relationships that show them the potential value of what you're building. And that's different from what I just did. I bought an existing business that I knew what it was. It's profitable. I know what it generates every day. But if you're looking to sell a startup, you're looking to sell the potential. And that you do not want to sell based on what it's worth today. You want to sell on what it's worth tomorrow in the hands of your acquirer. This book, really great read. I recommend it highly.
Just under 250 pages for those who may be looking at it as well. But a good resource, and thank you very much, Keith. Nicole, following up to you, and also Keith, congratulations to you and your team on the acquisition as well on both sides. Nicole, I mean, being a venture partner, working in this area, but also working on the marketing side, what lessons have you learned in preparing a business for exit or looking at that acquisition process for some of the funds that you may be working with in the diligence?
Yeah. So congratulations, Keith, on the Talius deal. I'm really happy for you. And I love that book. And that actually mirrors the approach that I've taken. So I've been fortunate enough to have taken a couple of companies through some rather significant exits and acquisitions. The first was my own. I sold my own company back in the day to Organic during the dot-com boom. But then after that, working with Glispa, we sold the company for 77 million. So lots of interactions and transactions that I've been a part of. And I really wholeheartedly agree with the BD approach to selling a business and positioning for exit. So I am actually right now in the process of positioning a company based out of Mexico for exit. And they have incredible technical talent. And that is a need in the marketplace right now. So positioning the company and telling the story of why and what their assets are, of course, what their IP is, and what those asset drivers are, but also, mirroring that with what are the market trends that are happening right now, where a strategic acquirer could ramp and scale the way that they need to. And so we're doing this exact same process as outlined in the Magic Paradigm, where we're speaking to a number of different potential acquirers across different categories. Right. So it may be technology companies in this case. It may be a staffing company. And they can then take a look at the business, see what the assets are, see what the financials are, and really see if perhaps this is a strategic acquisition that could help them with their growth objectives, their valuation, what have you. So yeah, it's really taking a methodical approach. It's doing really good comps. I can't emphasize enough how important it is to do your research. And comps are out there in the world. I mean, of course, for the public companies, but for the private companies, you do have, I'll just say it, kind of expensive tools like PitchBook, but the PitchBook folks are always ready to work with you to help with seeking that data. But it's really, really important that you have and understand comps, and who's out there, who is taking an active role in acquiring companies. Now that UpStage looks at clean tech. If you have a clean tech company, you should be looking at UpStage, right? So find those targets. They're out there. You can do the research online to a very large extent to seek out who those strategic acquirers might be and get your deck ready to go and take it from there.
And it's also a process, I think, is what we're getting at. And Vandana, I want to get your thoughts here in just a moment as well. But this is not something that just happens overnight, as it may seem in a press release, or it may seem in an article that's been put out of the details of the transaction. Some of these acquisitions take months of negotiation and then months to close as well. We just saw FTX and LedgerX finalize their acquisition that was announced at the beginning of 2021. Come full circle, we're now in October, end of October at that. That's almost 10 full months that this acquisition took after publicly being announced. All of the inner workings, the integrations of these teams, the legal aspect, going back to what Nicole was mentioning around setting the comparable or the comps, making the terms, getting the legal documentation all aligned. There's much more to this process than those may think. And also, it is easier than anyone will believe or think, to lose that acquisition or to not exit. By being overconfident and not knowing the data and the comps, by underestimating, by all different types of options. So be ready to spend the time, but also continue to build your business at the same time, and don't shy away from your customers as well. Vandana, any thoughts otherwise to add in terms of what you've gone through and what you've learned as an investor preparing businesses for exit?
Yeah, I mean, a very good option of exiting a business is to merge or get acquired by another company. And mergers of companies with complementary capabilities bring economies of scale to the newly formed business. So I would suggest to look for a capitalized acquirer who can close deals fast on a professional terms. In an acquisition, the entrepreneur's equity will be taken over by the acquirer, thereby providing him with an exit. And also, one should be wary of running your company with the aim of being acquired by one specific company. If your planned acquirer is not interested, you are risk building a product so specialized that no other business will buy you either. So I think there are certain steps when we prepare a business for exit. And the first step should be to prepare your finances. The first step to develop the exit plan is to prepare accurate account of your finances, both personally and professionally. So I feel, we should also, give some tips to these entrepreneurs as to what they need to do to prepare the business for exit. And of course, I have seen various exits myself also. And there are different kinds of exits that happen. And I'm very glad that UpStage has done this great work and also suggested the wonderful book, which I would be recommending and reading also.
That's a good point in terms of different types of acquisitions. And I think Keith brought this out as well, is there's, acquisitions to particular pieces of a business units, for instance, IP, or specific assets, in addition to the entire business itself as well. And that's something to be aware of, is that as you build your business or you invest in businesses, you have this opportunity to kind of acquire or sell off various pieces of that, right? Again, intellectual property ownership or assets are just a piece of that. Keith, I see you unmuted. Anything to add? And then Nicole, I'll come back to you in just a second.
No, I think it can be a useful strategy to, as you increase your focus on your best market opportunity, and you find that there are other markets that you had, maybe your initial products, your minimum viable products, perhaps was addressing a small niche market, or a market that for whatever reason you've determined is not the best market for you to focus on. It can be a really good idea to divest of that particular product, or perhaps the IP and other technology that underlies it, if that is valuable to a strategic partner out there, and will free you up to focus on your primary core business, and provide capital for the expansion of that primary core business. I think it can be a really good thing. I did a lot of work. I've been doing clean tech for more than 2 decades, and so I did a lot of work in nano, and I saw a lot of nano companies that were basically funded science experiments, labs that were kicking out really fascinating things that at first nobody was sure how to apply. And I saw companies like Nanosys generate product after product and move on, but license or outright sell those products to strategic partners for use in, for example, OLED displays, etc. And that would be a really useful source of capital for them to keep their primary business going. So it's not an all or nothing story here. There are opportunities, but you want to make sure that you have it cleanly divided. You don't want to poison the IP in your core technology offerings by giving up rights that compromise what you're trying to do at the core there. So make sure, if you're going to sell off part of your business, that it is clearly delineated from the thing that is most valuable for you to keep.
It's a very, very good point, Nicole.
Yeah, case in point. So I was fortunate enough to be part of the team that sold Next back to Apple. So we brought Steve Jobs back to Apple. And if you recall the deal, we were acquired, Next was acquired for our operating system. We were clipping along, doing really well, selling, web server technologies and all these different technologies, and the business was growing at an exponential rate. But ultimately, Apple needed a new operating system and they acquired us next for that operating system. So I think there's a lot to, you know, telling the story around the different assets of the business or the different business units, because those may be attractive to different acquirers for different reasons. And so, what I recommend is that you tell the full story. So, in the case of my client in Mexico, they not only have technical talent, but they have a core expertise in conversational AI and creating chatbots as well. And so we're telling a full story around the 20,000 people that they have in technical talent. We're telling a full story around the conversational AI and chatbot capabilities, because an acquirer may be interested even more so in one of those assets that really is the root of what would be strategic for them. So just my point is, build the full story around these different business units, but also keep it focused. To Keith's point, stay focused as well.
Absolutely, and couldn't agree more on all points said today. Want to come around for closing thoughts and advice that you have for entrepreneurs going through this. Any last pieces of advice that you would give them as investors, having gone through this again on both sides? And then where can you be found online? Vandana, let's start with you. A piece of advice for those entrepreneurs, and then where you can be found for those looking to reach out and connect.
Yeah, so I think there are some challenges that the business will face when they are preparing for an exit. And I feel that forming an exit planning team is really, really essential. It can be challenging to come up with a well thought out exit strategy. Forming an exit planning team that is experienced with structuring deals, particularly deals that involve exit strategies for business owners, that will provide to be mutually beneficial for all parties involved. And the exit plan should include increasing the overall net worth of the business among other factors. And, we are happy to look at deals that require, such services. We could be reached out on LinkedIn or our website, www.convanto.com.
Wonderful. Thank you very much, Keith. To you, closing thoughts of advice that you would have for all those entrepreneurs getting ready to go through this process, and then where can you be found?
Yeah, I would say that your best chance of exit, of getting a really successful exit, is to engage with business development early and to get into bed with as many partners as you can. And there are lots of ways to do that. Divide up your market. Hopefully you've already done a really aggressive market segmentation exercise. Give somebody the exclusive for making widgets in Wichita, and give someone else the exclusive for making next gen widgets in Japan, and give someone else an exclusive for the application of widgets into janitorial supplies, right? Like, just come up with all these segments, divide it by geography, divide it by application, divide it by time, give people 1 year, 2 year limited exclusive, but get into bed with all these people, make them feel special, really engage, provide them with value. So long as it's not distracting, it has to still be in the service of selling widgets here. And those people will develop trust, and they will get to know your team and the value of your technology. And they will start to think about what could they do with it if only they could take these widgets out beyond Wichita. So get in bed with lots of partners. As for where you can find me, UpperStage.capital is the website. Follow me on LinkedIn. It's my most active social media. And there'll be lots more announcements coming up here since the Talius acquisition. We're moving forward on a couple of other acquisitions, and we're raising a large fund to do 15 or 16 of these over the next few years. So very excited to tell you more as things unfold on future VCTVs.
Wonderful. Thank you very much, Keith. Nicole, close us out. Closing thoughts, and where can you be found?
All right. Well, I want to amplify what my colleagues Keith and Vandana have said. You know, it's handling an exit. It's like investor relations and business development sort of combined and on steroids, right? It's super important that you are deeply knowledgeable about what's going on in the marketplace. It's easy to find out who's acquiring businesses and in your market. So do that research, run the comps, have an understanding of, the businesses being acquired, the valuations that they're being acquired at. Just really know that so that you are positioning your business successfully. And that is just a really fun process to go through. And as Keith mentioned, do the dance, get into conversation with a number of different folks and keep them updated with your progress along the way. It's a combined investor relations BD approach, and I found it to work. I've had multiple companies that we've helped bring to exit. So with this exact approach. So love to carry on the conversation. The best way to reach me is via my firm Outfront Solutions. It's outfront.solutions or on LinkedIn. And you can also reach me there. And yeah, good luck in your journey.
Wonderful. Thank you very much, Vandana, Nicole, and Keith as well on today's insights around preparing your business for exit. And congratulations, Keith, on your recent acquisition and exit, but also Nicole, early congratulations on the one you're preparing as well, hoping for the best in that effort. With that being said, a big thank you to everyone for tuning in. If you haven't done so already, like, share, and subscribe on today's episode. Please do reach out to all of the speakers, myself included. We'd all love to hear from you. Add context, where you heard us, where you met us, and what you would like to continue the conversation about. I'm your host, Kyle Ellicott. A big thank you to the Token team, Hasmik and Maria, for making today's episode possible. With that being said, everyone have a wonderful day, and until tomorrow, talk soon. Take care, everybody.